The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we kicked off the week on Monday, soybeans, bean meal, cattle market, those were the big winners on the day. Wheat, though, was a big loser. We're going to talk about all of that and more as we kick off a very busy week with the March World Agricultural Supply and Demand Estimates Report coming up on Wednesday. Joining us now, John Heinberg with Total Farm Marketing is with us. John, hope you had a good weekend, sir, and thanks for being on the show today as always.
Yeah, it was actually a fairly nice weekend here. I mean, for March and end of February. So, we'll kind of see how things go as we got a little more snow, but not as much as some people are dealing with out there. That is for sure.
Well, and it sounds like for you there in Wisconsin, folks across the north going to get some more snow in the forecast this week, too. We heard that from Eric Snodgrass. So we're going to be watching and seeing how that all plays out here for this week ahead. And speaking of this week ahead, John, I mentioned got the WASDE report for March coming up on Wednesday. I know we're going to talk about that here in a little bit. Talk about some of the moves in the grain trade as well here a little bit later. But first, I want to start with livestock today. This cattle market on Monday, feeders screaming higher here to new highs. Live cattle up moderately, we'll call it, on the day. Man, what happened in cattle? Was it just a case of some good money flow in, or is there something that I'm missing in the trade, John?
I think it's a combination of factors coming in. Let's go to that feeder market because that's where things really got volatile today with strong triple-digit gains there. We're breaking out the new contract highs. That's a chart that just a few days ago I was talking about looking a little bit on the defensive with some reversal action in it. And then, boy, we just kind of blew right through any seasonal weakness here so far to start the week this week. It's coming down to the cash market for feeders, at least at this time frame, from talking to producers out there. And I've been hearing this for quite a while, that what they were seeing on the cash market versus the futures weren't coming together, and they felt the futures market was undervalued. Now, lately, the cash index has really taken off in the feeder market. It was up $1.40 something plus today. It's been basically climbing steadily higher, but really surged out these last couple of weeks here. And that's, I think, is spilling into that feeder cattle market overall. And then you throw some technical buying in. We just have tight supplies, and the cattle just are not available. There's good value in the long-term live cattle market, and then there's so demand is there for the feeders. Throw in just some weakness in the corn market as well to help tighten up some of those margins a little bit. And here comes some money flow into that feeder market, which looks expensive. But when you look at history in terms of where it could get to, we still got some room to run.
Well, we were just talking here this last week or so about how, this cattle market was maybe looking a little tired. And then here we go and just flip the script to start a new week. And I know, too, I was looking through some numbers, year-to-date beef production down, I think, 4.5% for the previous year. And that's just indicative of what you mentioned, just tight supplies out there. And I think about a little bit warmer weather, folks maybe getting ready to go grocery store shopping, grilling season maybe starting up a little earlier, probably not. But I just think about some of that retail demand and more. It definitely seems like it's shaping up this cattle market nicely after a little bit of a lull the last week or two.
I would agree. And, you go look at the retail prices. Obviously, there's still some value out there. I was looking at the grocery store even yesterday, and I'm like, hey, ground beef's on sale. We got some prices here. They're manageable. They're not really taking off compared to where they could be given the value of what we're seeing on the other side of the equation. So, there's still some, meat on the bone for the consumer. For that regard, we'll see what grilling season gives us. You've kind of been talking about a script here. I've said a couple times, like, it's looking a little tired. And then we take a little breather, and I'm talking like a 1 or 2 day breather, and boom, next leg. Same thing happened this week too. Last week things didn't look very good. Kind of talking about keeping some puts in play. Again, boom, here we go. New highs again today. So this thing really kicking in terms of that money flow. And that's one of the reasons when it comes to managing your risk, especially in this market, I've been kind of talking along the lines here, making sure you keep puts underneath, but I haven't done anything to lock in that top side because we just don't know. We're looking at a very historic situation in terms of the tightness of cattle. Throw in there what's going on in terms of the demand side of the equation and just all the movement with money out there. This market could take those highs out from 1214 and to 2014 and maybe then some. We'll see, because the cattle market just doesn't have the supplies, and we haven't seen anything to really change that picture yet so far as we started 2023.
Well, speaking of supplies, Hog Market, I know price is under some modest pressure on Monday. Looked like, for what I saw, the weekly kills exceeded expectations based on the latest USDA numbers. I'd have to think that maybe factored into just some of that moderate pressure in the hog trade on the day Monday, John.
Yeah, that April contract just can't seem to get any real traction. It felt like we had something moving, and all of a sudden, boom, it falls apart again. And even today we tried to turn a little bit positive, and now we're down $1 at the settle. It just doesn't seem like any money really wants to step into that April contract. Some of that might be that tied to that index and the premium that the futures are holding, but we're getting a little bit more manageable, $4.50 to $5, where that difference is between the two. One thing I'm watching though is that April-June spread. It's really wide at $16 plus. Maybe that needs to narrow up in here somewhere as well. So it feels like the hog market wants to go higher. I want to say that low we put in a couple weeks ago is the low, and we should be starting to trend that way. We're still seeing a decent move in the cash market. It's been trending higher. The index was up again last week. Retail values are kind of falling or pausing around this 85 on the carcass weight level. So we'll have to see. But at least at this time frame, just feels like the money doesn't want to push us out. Maybe they're using that as the backside against the cattle trade with such strength in cattle markets. Let's sell some hogs as a hedge against it.
That's a good point there. And I'll be watching how hogs trade, see if April and that cash index continue to converge or whatnot. Maybe that's what we need to do before we make a leg higher. We'll have to see. Dairy market, why don't we stay with the proteins here real quick? Let's just touch on dairy before we go over to grains. Anything you are seeing stand out to you there as we start off the week, John?
Well, again, I've called this one other time. We'll see if we can see it put together. But that 1740 area on that April contract, a little bit of a double bottom last week, kind of held that again here at the end of the week last week. A little bit higher now. We'll have to see. The biggest thing is going to be about demand. There we're watching cheese prices, big difference between blocks and barrels. Hopefully we can get that to tighten up. We got a little bit of boost in the barrel side today in terms of being about 5-6 cents higher. So that's giving us a little strength. I think it's a market. Hopefully it's trying to put some significant lows in, and hopefully it can turn. But again, we're going to get to that window. We're going to see production continue to ramp up as long as the demand's there. That's going to be a big factor, but I'd still be a little cautious market. You get any good runs up, it's going to be an opportunity, I think, to make sure you get some defense put together, making some sales on that milk. Because again, just the whole overall picture still looks a little bit heavy right now, at least for those milk prices. Hopefully we can hold this latest low that we put in here. Otherwise, it's still a slippery slope.
Yeah, it just feels like this dairy market has been on that downward slope, and it really feels like one of those markets. We talk a lot about risk management, but as you mentioned it again there, protected some of that downside risk here for our dairy men and women just with the way this market has been acting as of late, John.
Very much so. And one of the other things too, and unlike in the livestock markets, where you get high prices, that might limit numbers in the lot. On the dairy side, when you seem to get prices coming down, they start breaking down production per cow. They're going to stuff an extra animal in or two to get some little bit more income. That just turns into more production. So it turns into a little bit of a vicious cycle in terms of too many cows, too much production, and just keeps weight on the market in general. So you can't compare the two, hoof and animals versus the milk production market side of it, and just at least in terms of the impact of inputs and feed costs.
We are having a conversation today with John Heinberg of Total Farm Marketing as we kicked off the week on Monday. And John, let's segue over to grains. Soybeans, meal, they were the big winners on the day. Little off the session highs, but still a really robust day there. Wheat, though, under a lot of heavy pressure. Corn kind of just caught in the middle between the two. I know export inspections, we got those on Monday. We can talk about those. Overall, Just to start us off, though, that to me, that just felt like the case of beans, wheat, upside, downside, and then corn kind of caught in the middle on the day Monday.
I'd say that's a good way to put it together in terms of how you bracket it out. Let's go right into that bean market. Coming back to that Argentina weather, a few weeks ago we had some moisture come in. Everybody thought that, hey, the later crop beans, they'll be fine. They're going to get supported. That kind of brought the market down. And well, guess what? The weather changed again, and now we're starting to see some more analysts cut into those numbers. There's some whisper of a sub 30 million metric ton number. That would be just a dismal crop coming out of Argentina. We're seeing premiums for soybean meal here in the United States starting to climb in terms of the cost that the producers have to pick up. So you saw soybean meal surge out to new contract highs today, held most of those gains into the close. The charts look a little friendly. That's spilling over into the soybean market as the crush margin still stays fairly strong. And again, we are still dealing with a tight supply picture here. We don't have 500 million bushels laying around. It's barely 200 million, or a little over 200 million according to the USDA. So we'll see how that plays out and going forward. So even despite those export inspections numbers being pretty dismal today, below expectations in terms of the analyst range, 500,000 tons, again, showing that export window might be closing. Here comes the domestic cash market, where cash here in the U.S. can still be king and keep some support in that bean market overall. In charts, we put a significant low in, kind of a turn low there when we hit 475, or real close to that or 1475 when we hit that on the May the other day. And that just seems to bring some more money flow into that. This is a low that can hold us. Now let's go see how far we can stretch it to the upside.
And it feels like in beans, especially, we just hit some of that chart resistance overhead. And so maybe now, to your point about setting that low, maybe we're setting, our high, and we kind of just got this range now that we're gonna play it for the foreseeable future, John. As I think too, ahead of Wednesday's WASDE report, I feel like maybe we're pricing in some of the USDA moves already in the market on Monday.
Yeah, we're looking at maybe a little bit of tightening. At least that's what the analyst expectations are in terms of the soybean carryout. Maybe we get a little bump in the crush, or maybe we do get a little bump in the export side, because shipments and things have been very, very good, and we are ahead of the USDA projections. To me, I think maybe we just kind of kick the can down the road on this one, leave everything kind of status quo, and we'll figure it out in April and May. But at the same time, we could see just a little bit of tightening, maybe coming down 5 million bushels, or 5 million bushels, what the market's expecting. So we could be priced that in. This 1540 area on the May contract, we kind of failed there a little bit today. It's going to be a pretty tough barrier to get through. If we do, then maybe we got some more upside to it. Right now, if you kind of plop it into a range, we kind of got back to the middle of the range today. So we'll have to see. It's a window. If guys have some beans, they need to make some sales, maybe to go ahead and take a look at those here before that report comes out, just in case we get something negative. We still hear talking out of Brazil. Okay, premium levels are coming down. Sound like good farmer selling today as that harvest continues to move along. There's still a window where that's going to weigh on this bean market overall, but right now it's still about Argentina and soybean meal and the demand for that meal product that's out there that's giving this market its boost.
On the complete opposite end of the spectrum, Monday, wheat was just dismal. Chicago, KC wheat, rumors and talk that the expectation the Ukraine grain deal is going to get extended. And I know that weighed in a little bit. And then it looked like we just fell below some chart support, and that accelerated the selling pressure there. Is that kind of what you saw in those winter wheats today?
Yeah, difficult day to start the week here in the wheat market, breaking the new nearby lows, and and definitely falling through some support levels. Started on the overnight session, talk of Russian wheat prices continuing the fall. That makes things even harder for us on the export front. Again, throw in today's export inspections at 260,000 tons. That's just basically minimal. So we're not moving the product overall. Got some forecasts for some moisture again across some of the southern plains, as that keeps some pressure in the winter wheat market as well. So just combination of factors coming in here. Just felt like maybe this market wanted to get a little footing after last week's difficult start. But now here we go with another wave down as the funds continue to push their short wheat position, or at least the best that we know they have, given the commitment of traders numbers. But I haven't seen anything to bring them out of that short position, and the news just is not there. And obviously that just spills over and makes it difficult for corn to rally.
Well, and speaking of corn, king corn, let's talk about it. Kind of caught in the middle. Exports, looking at those inspection numbers, talk that USDA could cut U.S. exports on Wednesday's report. I know those are out there in the trade. We got some sales that we got reported Monday morning as well. But this corn just seems like it is on that teeter totter right now, John. I don't know. That's the best way I could say it. And it's getting ready to go one way or the other.
Yeah, it is. And again, maybe we got some support in here, but boy, if wheat keeps pulling down being the anchor, it's going to make it hard. We're still got a lot of demand concerns. Nice to see a couple sales step into the market here today. I mean, right now we are the most valuable corn, most valuable in terms of price corn in the world at this time frame. Just a matter of how much is out there for supply. You still got a lot of battle here in the countryside between east and west, trying to get product for that from one side to the other. So that just still is some of the reason I think the exports aren't there. Things are just limited in terms of what we have to offer overall. But with that, just again, market today just didn't seem to want to go anywhere because of the way the wheat market was acting. Now, if we go into that report this week, they do raise carryover up. They're talking maybe about 40, 50 million bushels is what the analysts are expecting. They're probably most likely on an export cut or an ethanol cut or a combination of the two. That just keeps the trend intact as supplies continue to get bigger from report to report. And that just makes the momentum and just the sentiment of the market stay on the bearish side in here. So I talked to a few producers today. If they got some old crop corn, do we move a little here if we get some strength? Probably a good window to do that. You can always come back and do some reownership. And also, what do we start thinking about 24 or 23 crop and getting some puts put in? Typically between now and Father's Day is that area you want to make sure you're building some base on the defensive side, at least in terms of that new crop corn.
John, I know you got a busy afternoon. We got to let you run. Any final thoughts you have for us real quick here before we wrap it up today?
Realistically, the report this week, probably more of a speed bump unless we get some types of surprise. We'll watch what they do with the Argentina numbers. That's still probably, I think, what the market's going to be focused on. USDA will likely slow play that in terms of bringing that crop number down even more so. But then after that, then it's going to get interesting. Then we got a couple of weeks to start talking about acres. And true to the report, that'll be the biggest focus of the market is the one at the end of the month with the planning intentions. So take advantage of those opportunities. Still a lot of risk and a lot of value out there in all these markets for producers, making sure you're just staying wise to and disciplined to your strategies.
And John, if folks have questions, want to talk to you at Total Farm Marketing, I know the website, phone call, email, a lot of ways to get in touch with you, isn't there?
Sure, love chatting with anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com. A lot of great information out there. Again, doesn't cost anything to pick up the phone and ask questions.
John, always a pleasure, sir. Have a great week. We'll talk to you again next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.